Hey guys, hello and welcome to this YouTube series. I'm Manisha Gupta and the spotlight this time around is on gold and gold buying by the global central banks. Well, let me start with the gold prices itself. And the first half of this year hasn't ended so well, but the second half has begun on a positive note. There are inflation concerns. Markets also are looking at uncertainty because of newer COVID variants there. And then the economic recovery also has been uneven. That has been supportive. And then we have seen good buying for gold on the digital platform. So online, whether it's ETF, gold bonds, global central bank buying, all of that has been on the positive side. In the Indian markets, it has been about hallmarking, India good delivery standards, and then SEBI coming out with a consultation paper on the spot gold exchange as well. So there's various things happening and it is exciting times, especially when it comes to gold. But as I said, the spotlight is on global central banks buying gold. Well, last year was good amount of buying and this year as well, the expectation is that we might be looking at gold banks being net buyers here. Well, it's an essential component of the financial reserves of nations for centuries, and the appeal does not show any sign of diminishing right now. So central banks have been net purchasers of gold once again in this year until now with the kind of numbers that we are working with, and central banks now hold nearly 35,000 tons of gold, which is about 1/5 of all gold ever mined until now. So central banks gold buying is aimed at increasing long-term stability of reserves. Central banks remain net gold buyers in first quarter of 2021 also. It is by 95.5 tons. It is slightly lesser than where we were in the previous year, but it clearly has been net buying even until now. So the first quarter of 2020, central banks bought 124 tons. This time around has been 95 tons. So 23% of a decline there. But as I said, they still have been net buyers there. The concerns are on because of the global economic growth and geopolitical turmoil. And that is the reason we have seen gold buying continue there. But what is the reason that gold has been a key asset for such a long time, and why do central banks add gold to their national reserves? Well, one is that gold is a great diversifier. It is not correlated to stocks or bonds and can add much needed diversification to a portfolio, also providing credibility, and is the reason we see it get added. Second most important point is that it is reliable and it is trusted, has been a wealth, has been a protector of value for centuries and continues to be so even now. The third more important point is that gold is an inflation fighter. With inflation clearly on a rise right now, and we saw the US inflation at around 13-year highs, gold clearly is being bought because of that one reason. Also, US and the Fed, the other global central banks, are holding rates at near zero, and that clearly has been supportive for gold also. Fourth important point is that gold has zero counterparty risk. Gold market is a global market, and the central and the metal carries a zero counterparty risk. It cannot go bankrupt, default, or otherwise screw its owners, and is the reason it continues to be a favorite there. The fifth more important point is that gold can be used for interventions. Well, the gold is an ultimate currency. It has holding as a part of central bank reserves, provides central bank planners as a powerful tool to intervene into the markets and as when required and for whatever purpose. So that's yet another reason. Finally, gold is a finite commodity. There is as much gold that is available, and that is the reason, as the supply cannot be added too easily, we continue to see the gold performance or the gold prices continue to increase in a near term and a longer term as well. And then gold also has an inverse relationship with the US dollar. That's another major reserve asset, by the way, which major global central banks hold. So it continues to be a major diversifier in that sense as well. So even as the the value of dollar dips, that wouldn't happen with gold. The gold value will continue to increase, and that is the reason it supports. The most important question really is that how much gold do the central banks hold? Well, if you look at the ranking here, the US possesses the most gold with over 8,100 tons, which equals to nearly 78% of their total reserves. So US is the one country which has the maximum gold in sense of their national reserves. Germany is number 2. It holds 3,300 tons and 74% of its reserves as of now are in gold. Where gold also represents 22% of Russia's reserves. China holdings are just about under 2,000 tons. So that is nearly just about 3% of reserves that China holds are in gold. So China doesn't really hold much of gold in its national reserves. Well, European Union members like Poland, Hungary, Turkey, Italy, these are some of the other countries which hold a lot of gold and have been continuously adding more gold to their holdings there. Well, as per 2021, the Central Bank Gold Survey, 21% of central banks intend to continue to increase their gold holdings in this year as well. So there's a lot of support coming in from there. Let's talk about India then, and RBI has added 900 kgs of gold in the month of May. So the share of precious metals within the national reserves now stands at around 7.9%. Between January to May, it bought 19.6 tons, and in 2021 until now, nearly 696 tons of gold is what the RBI is holding. In 2020, it bought nearly 41.7 tons. 2019 was 34.5 tons. So the RBI clearly has been adding gold. You know, it was in around 2017 that RBI started to buy gold yet again after a gap of 8 years, and since then it has been adding gold to its reserves now. 2009 it bought 200 tons of gold from IMF. So as I said, it has been constantly buying gold, and the gold reserves as of now stand at more than 7% in the Indian markets there. India also has the 10th largest official holding in the world when it comes to gold, and the expectations are that this buying or net buying from the global central banks is expected to continue in this year as well.